How to become a millionaire in the year 2023 with just $5 a day. Guys, that's less than a cup of coffee. Let's get into it. So I want to start out with this famous quote from Mr. Warren Buffett. He said, "Be fearful when others are greedy, and greedy when others are fearful." Guys, there's blood in the water, we could call it. The stock market just had its worst year in the last basically 17 years. Since 2008, S&P 500 finishes 2022 down nearly 20%, right? We don't know what's going to happen in the US. Inflation is expected to slow in the next coming months, but that could also mean the United States tips into a recession. We don't know what's going to happen with the Russia-Ukraine war. We don't know what's going to happen with the US economy. We don't know what's going to happen with the rising numbers across the US of the pandemic numbers, right? We don't know what's going to happen. And this is usually the best time to start buying. Now, this is not financial advice. Always do your own due diligence before you decide to invest. But we have seen in the past that when people have bought, when fear is high, they usually come out on top, right? And we know, right, that the wealthiest 10% of Americans own a record of 90% of all US stocks, meaning that the rich are getting richer even though they had a bad year. But what does this mean to us? It means that most of the people around the world, they don't own stocks, right? They don't. Only the richest people own a significant amount, right? And we know that 75% of the ownership in the stock market is institutions. Only 25% is retail. And out of that 25%, right, only 10% of Americans hold 90% of all that 25%. So that's a huge amount of money that's held by a significantly small amount of people, meaning that people aren't investing as much as they should, right? And we know, right, that you might say to yourself, well, Avi, interest rates are high now, so I can just go and put my money in my bank account and, right, close it for 2 years, and then, I'm going to get the interest rates. Well, yes, that's a valid point. The problem with that is that now the probability of interest rates going down, so currently it's at 4.5%, the US interest rates. Currently, the probability of another small hike is 92% and a deduction is 7.6%. But if you look at this graph here that I'm going to show you, in 2007, right, the interest rates were very, very high. They started bringing them down in 2008, right, just before the financial crisis. And then for almost about 10 years, almost, right, from 2008 to 2015, so that's 8 years, 7, 8 years, it was at zero, right? It was almost at zero. They raised it into 2020. And then when we had the pandemic, they just put it back down to zero. And then they went super aggressive, right? Super, super duper aggressive. Now the question is, right, will they reduce it back to zero? Now let's say they reduce it back to zero, right? If it goes back to zero, the markets could run significantly. Now, there's been all kinds of projections. What will happen with the stock market, with the crypto market? Cryptocurrency is down big, right? And we know the cryptocurrency Bitcoin goes in 4-year cycles. This could be an opportunity to get in on the ground floor after a really rough year. Now, does that mean that the markets won't continue maybe to go down a few months now? There's a possibility, right? But if we use the $5 a day method, right? Let's say we take $5 a day and we want to start investing, right? Let's say you don't have any money. You want $5 a day, right? So let's say that's $5 a day and we have 30 days in a month. We're going to round it up there. So that's $150, right? $150. And let's say you're 20 now and you want to start saving for your retirement. Think to yourself, can you save $5 a day? Let's say every day you go to Starbucks and you get that Frappuccino and you say to yourself, you know what? I'm not going to be getting that Frappuccino anymore. Instead of going out to eat 4 times a week, 3 times a week, I'm going to go out 2 times a week or 1 time a week, right? And it's not going to be that big of a sacrifice. You save $150 a month. It's not huge, right? Let's say you get 10%, which is the average return on the stock market. Yes, it's down 20%, but usually after a bad year, there's bounce back years. So on average, it's 10%. We calculate it, right? In 40 years, whoops, one error, initial investment. Let's say you put in 0, right? We had a technical difficulty time there. You're going to have in 40 years, $796,000. Now you invest here, 72,000, and you're going to get 796. So that's a 10x return in 40 years, right? So you're going to have close to $1 million. Now you might say to yourself, well, Avi, that's not a lot, right? Well, if you instead of $150, you put in $1,500, right? So it's already almost $8 million by the time you retire. Now, with inflation, we don't know how much $8 million is going to be worth in 40 years. But what I can tell you is it's going to be a lot worth more than it would be if it was just 720,000 that you wasted, right? Or you did nothing with and you just put in your bank account. Because we just saw that interest rates, they go up and down, right? We don't know where they're going to be, right? In the early 80s and 90s, they were pretty high, right? And in those times, right, 1984, look, it was at 10%, 9%, right? 10%. In those times, it would have been a good idea to keep it in a savings account if the bank was giving good returns, right? But since the 2000s, it's not been that high. And 5%, yes, there's not a lot of risk, but you have to lock your money into those kind of the saving account, and then you can take it out if you need to, if you want to. And so that's a risk. It's just like staking in cryptocurrency, where if suddenly everything crashes, you can't take your money out, right? So in a bank, if the bank is probably not going to crash, although it did in the history, but that's not going to happen. Let's say you say, well, Avi, on the flip side, I don't have any money to invest, right? So let's see how $1,000, right, would change it, okay? Change the numbers. So if you put in $1,000 instead of with the initial investment and not just $150 every month, you'd have another about $100,000, right? Right? We take this off, put 0, right? Remember, 841, calculate 796. So another $50,000. So you wouldn't have that significant amount of change. What do I want to emphasize with this is many people will say to themselves, well, I don't want to start investing, right? Because I don't have the initial seed money. No. Start putting every single month, right? A month, doesn't matter. Stock market is going up, going down, going up, going down. Take a specific amount, right? And put that in an index fund, something stable, something safe. This is a possibility. I'm not saying that you have to do this. This is just the plan that I would do if I was starting out, or even if I was already 10, 15 years in, and especially after 2022, and I'd be like, you know what? It was too wild for me. I've been investing in too crazy of investments here. I lost so much money. Okay, let's reset, right? Let's reset. Start taking a percentage, a specific percentage that you decide. $5 a day. It can be more, it can be less, right? But I think $5 is the minimum in my opinion. And start putting that in index fund, right? Slow, not high risk, high reward, right? Medium risk, potential, high potential reward, and have that as something that goes with you. It can even be on automatic. A lot of the brokerages will allow you to do that automatically. $150 every single month. Boom, it buys. Boom, it buys. It doesn't matter what the price is, what's going on, what's happening with the market, what's going around the world. It's automatic. It's happening, right? You don't have to think about it. And then let's say that becomes, over the years, a significant amount of your portfolio. You want to do crazy things. You want to do high risk, high reward plays. Great. But that only 10% of your portfolio at max, right? And it should even be even less. Could be even 2% for things like high risk cryptos, options, leveraged crypto investments. I don't know, a high risk NFT. I don't know. Maybe there's going to be new things. Maybe the new thing in 2023, I think, is going to be AI related things. So maybe it's something like that this year that you get into. There's going to be a lot of possibilities here in 2023. And it's going to be very interesting to see how this is going to play out. But that would be my base, right? My base would be And that for sure, right? If you invest correctly, right? Think about it. It's only 10%. Let's say you put $150 and you're doing something a little bit more riskier, right? For 20%, look at how the number changes, right? That turns into 13 million, right? And so that could be significant. And that's just double the percentage every single year, right? And so it's very important that the stock market down is now 20%. So you're getting it at a significant discount than you would if you would have started investing last year at this same time, right? And so it's going to be very important to see how this will play out, how 2023 will be. In 40 years, I don't know if I'll be here. I'll be an old for crypt man, right? I'll be 76. I'll be a grandpa by then, hopefully. But it will be an interesting journey, and maybe we'll check in another 40 years. I'll still be on YouTube. Maybe, who knows, in the metaverse. Guys, don't forget to smash that like button and check out MooMoo, our partner. They're giving out 15 free stocks when you sign up, and you can also trade options and stocks if that's something interests you, if you live in the United States of America or in Australia. Thank you for watching. I hope to see you next time. And like I always say, let's make a lot of money.